All right, quick market update. Let's take a peek at Bitcoin. We'll look at probably a couple other charts, but mainly I want to just hammer down the Bitcoin chart. So what do we have here? We have a pretty congested area of a lot of confluence of support between, call it 61.5 and where we're at right now, 65.5. We'll get into each of these levels of support and talk a little bit about why I think this general region is probably going to hold, right? And then, my base case is that we move upwards and resolve this long, choppy range to the upside. Okay, so first and foremost, let's actually get rid of our drawings here, and let's just look at our moving averages. So I've got the easy bands on. You can see, like, historically, the easy bands simply kind of give us a picture of where things are overbought or oversold. Think of it as Bollinger Bands, but they use a different methodology. You can go to Sistine.ai to read more about them. But we have our 21-week simple moving average coming up here, which has historically been a pretty good region to buy. Sometimes we deviate below it, reclaim it. That's pretty bullish when you reclaim it. And that's currently coming in at 61.5, 61.6. By the time we do come down to it, we'll call it 60, 62, right? But again, we sometimes we go below it. So essentially it's coming in at the bottom of our range here for Bitcoin, give or take 60 to 62K. For me, as long as 59K holds, 59K was this wick over here. Let me zoom in a little bit. 59K was this wick over here. When we lost it, we had to really think long and hard about whether we were going to be bullish or flipping bearish, but we reclaimed it, got really, really bullish when we reclaimed it, and we've moved up from there. But right now, that 21-week simple moving average sitting at the bottom of a range, right? So beyond just that moving average being there, we're currently losing the 100-day moving average. I'm not a big moving average person other than the 21-week SMA. I like that moving average for whatever reason. We are holding resistance on our 100-day, but it is acting as kind of historical support in this region, where if we pop up and revalidate it or pop up back above it like we have in the past, that's usually a pretty bullish signal, right? You lose it, pop back up, revalidate it, you're good to go. Let's get rid of the moving averages and let's get some of our drawings back on here. So you can see I've drawn out the range here. I've cut out some of the deviations, but even if you take our range tool here and you draw the entirety of the range, you see where price action is at this very moment. It's at our exact midpoint of the extreme high and the extreme low of our last 110, 120 day range. That's a 65.2, right? So that's why we're kind of seeing this dance on 65.2, trying to hold support. Wouldn't be surprised if we lose it here in the short term. Again, I've been pretty adamant about maintaining my bullishness throughout this entire range. I think that this is going to resolve upwards for multiple reasons, halving being one of them, but won't get into those fundamental reasons at the moment. Brief period of, hey, we got to watch this really, really closely, but once we revalidated, back to being bullish on this consolidation. So let's get rid of that. We're at our midpoint right now. We're also at a pretty major trend line, that dates back to like October. Basically, this entire bullish move here going into the ETF. Coming down to this trend line, could we slip below it, revalidate it? Sure, right? But this is something that we want to pay attention to. If we slip below this and come down to some of these other levels, if and when we do revalidate it, or if and when we bounce and hold it as resistance, those can be signals at some point in the future about whether or not we want to be bullish or bearish. Not going to give too much weight to just this one trend line, right? It's just a trend line. We've been ranging a long time. We could range through, hold as resistance, and then get, it's just a trend line. I don't think it's worth giving too much weight to it, but something that it's worth paying attention to when price action is sitting right there. So I'm going to get rid of that for right now. You can see I've kind of drawn out, depending on how you draw this range, if you cut out the deviations and you just kind of use these as the highs and 59K as the low, Our midpoint does come in a little bit lower at like $64,500. You can see that historically this has been a pretty big inflection point. So I've kind of marked that out as well. So in this just general range, we've got a lot of support going on. And there's a lot of reason to believe that this downtrend that we're in right now, even if it doesn't stop, even if we go lower into some of these levels down here that I'll walk through in just a second, this is where this can start. We can start to see some buyers start coming back in, some sellers closing their short positions, right? Sellers leaving the market, where we can maybe start to see this flatten out, or even if this accelerates and we get liquidations, a situation where it jumps right back into this level for more consolidation. So that would be like, hey, if this kind of, not a blow off bottom or a blow off top or whatever, just like a big liquidation, probably jump back into this region, right? Alternatively, we could potentially start to see some rounding out here, right? Some rounding out, because we do have some support in this region, could get, decent bounces. We do have bullish divergence on the RSI I'm on the 4 hour here. So, excuse me. We've started to see this play out already, right? But depending on where we potentially find a low here, we could get, some bullish divergence. Like if we make a higher high in RSI, and then, come down like this, we could get 4 hour bullish divergence again, and that could again contribute to some sort of a bottom forming. Beyond that, I've got like 3 levels marked out down here. These are margin pressure levels. So the entire market trades very heavily, is particularly Bitcoin, very heavily on leverage. So I'll walk through these margin pressure levels. It's something that I haven't covered in quite a long time. So we've got essentially our Bitcoin all-time high here, 73,777. We're on Binance. It's gonna differ depending on what exchange you're at. This point here that I've marked out, our 5x short margin pressure levels, 61,480, right? And before I go any further, like, you can see how important these levels have been, right? And how much we've interacted with these levels recently, right? The one that we've got coming up, if we continue to move downwards, is 61.5. And it's our 5x short margin pressure level. And all that means is that once price drops below this level, right? Once price drops below our 5x short margin pressure level, right? You can no longer, or the market can no longer, go short on 5x leverage while maintaining a liquidation point above this all-time high, or local high in this case, right? So there's a lot of market participants that are going to be wanting to short the market, but as soon as we drop below 61,480 and they want to keep a liquidation point above the all-time high, they can no longer do so at roughly 61.5. So that removes, right, at this particular point on the chart, price point, that removes some incentive to short the market. It also removes, it decreases the amount of leverage or the amount of capital that you can short, excuse me, that you can short the market with while maintaining that liquidation point nice and safely above this all-time high, right, which a lot of market participants are going to want to do. You can also see I've marked out 59K this point in time. This is why 59K for me was a big level in addition to this wick over here, right? 59K here, 59K was our margin pressure level, right? If we drop down below here, this is the point where anywhere below here and anywhere below this point, it's where those 4x shorts can no longer enter the market and maintain a liquidation point up here. So the shorts just get increasingly risky, right? And they get diminished, diminished leverage, right? They can't use as much leverage to pound this price down as before, and that's just kind of the cutoff level, right? So there's a short margin pressure level. Let's throw on our long margin pressure levels and zoom out a little bit. We're going to find our local low. Like, where are these traders going to want to maintain liquidation points below? If you're longing Bitcoin, well, ideally you want to keep a liquidation point below this chunk right here, right? This is 50K, 50.5. We'll zoom in and get the absolute local low, right? There are a lot of longs in this market or a lot of people potentially even looking to open longs that are going to want to keep their liquidation point down below here, right? You don't want to keep a liquidation point here because you could, if we get a flash wick, a flash crash, right? This is likely going to be a lot of support, and you don't have that support if you're keeping your liquidation point at 54 versus 49. Right, so where are those buyers going to want to step in? Well, those buyers can use any price point below 63.15, right? 63.15K, which is this level I've got marked out here. That's where you can start using 5x leverage on your buys, 5x long leverage. You can see this denoted right there, long 5x, while maintaining a liquidation point below, call it 50.5, right? This swing low right here. So you're gonna see a lot of buyers step up in this region. Right? You can see they've stepped up in the past. They stepped up over here, right? We dipped below and ended up pushing back up above, and then once we reclaimed this level, we were good. But if we move this even further back to the extreme bearish scenario of hey, where's like the lowest reasonable place that Bitcoin could go in the short term here? Like even if you're super bearish, I've seen a lot of calls for like 40K and 43K. I would say, below this post ETF bottom after all this GBTC selling, let's say Mt. Gox distributions hit and the market panics and we just where are you going to want to keep your liquidation point to protect, on a long, to protect against the scenario where we just kind of start plummeting due to Mt. Gox distribution? I'm just coming up with what's the most realistic thing that could actually take us down here. Again, I think this is going to resolve upwards. I think people are too worried about Mt. Gox distributions, but hey. So probably a lot of people keeping their liquidation points down safely tucked below 38.5. Right. Well, that's going to give us some support at 57.8. Right. If we start to take out this, we start to take out 59 again, look for just a quick bounce at 57.8 or so. And then we can run the same exact exercise. And for anyone just kind of still confused about this concept, that's where you can start longing on 3x leverage, maintain a liquidation point below this local low. And then last but not least, right, to our range lows. 56.5, right? If you don't think we're going to run these lows, right? You think this is the local bottom of this entire consolidation, this entire range. Maintain a liquidation point down below here. In order to do that on 10x leverage, you are going to want to get an entry point below 62.8. So if Bitcoin gives below 62.8, if it gives below 62.8, expect a lot of buyers to come in on 10x leverage, right? Pushing this price back up. You see a lot of buyers come in on 10x leverage because that allows them to maintain a liquidation point below this swing low on 10x leverage, right? So I've marked out, essentially 3 of what I believe to be the most important ones that we just went through. And there's some confluence here around 62 to 63. High 62.8 to 63.1, and then we've got that other short margin pressure level at 61.5, I believe. Maybe this was a long margin pressure level. There's just a lot of stuff in this region in conjunction with just the entire all this structural support down here that if we do start falling back down to this region, now that we've established this nice low and that gives us some support at 62.8, I just think there's too many things. Too many buyers coming in at this region for us to not get at least a very strong bounce and make another attempt at highs. And I just, for fundamental reasons, I do think that we will ultimately resolve upwards. Last thing I'll say, I know this video has been kind of going on for a long time. The videos are always long when I end up walking through margin pressure levels because I have to explain it conceptually. So the last thing I'll say is, we do have some tax selling incentives happening this week. This is something that we put out a full report on this at Sistine.ai for our subscribers and members. And it's a very interesting concept. But essentially what you need to know is that there's going to be a lot of potentially this week. This is a big week for long-term capital gains incentives. I'm not going to get into this concept. Go over to Sistine.ai if you want to learn about this. But essentially, there's a higher than what I would say is just a higher propensity than usual for some spot sellers to come in and be taking profits, right? Up until roughly June, give or take June 21st, you can kind of see I've got this vertical date, June 21st marked out. I don't get into like astronomy or anything like that. I know some people do. It's also like what, summer solstice or something. It's funny that it just, works out that way. Again, I don't put much weight into that or any at all, for that matter. But I do think the next week or so, it was June 17th, next 4 days, the next, even, give or take 3 to 4 days after this level, like I would look for this to be like from a time frame perspective, a major inflection point. I'm personally looking for a local bottom to form just in this. It's, I know some people are going to point to a chart and they're going to be like, hey, we are going to this is the target 61.6 and we're going to bounce here. Or people are calling for 43K. No, I am giving you like a region of time and, a region on the x-axis, which is time, and a region on the y-axis, which is price, of where I am personally looking for an inflection point. I don't know if Bitcoin's going to go, to 54. Like, I'm not going to tell you an exact point. But I have a lot of reason to believe, based on just some multiple confluence of support levels, as well as some, tax selling incentive and time frame analysis, that I think just in this general region, right? This general region, technically, like this is, maybe forming a little double bottom here. Maybe we form a bottom, before this inflection point. That would be great. I would love that. But in general, I'm just looking basically anywhere down to 59 in the low case, but probably around, like, if I had to guess, around 63, 62.8, around June 21st, give or take a few days in either direction, right? I think, we see something like that, or like a rounded bottom, or, something like that. Essentially, that is my base case that I'm outlining. Could I be wrong? Yeah, absolutely. But this is based on all my analysis. This is my base case that we form some sort of inflection point, local bottom, give or take June 21st, couple days, somewhere between 65 and 61.5, give or take a couple $1,000s in Bitcoin, right? In the meantime, I think if we do see that, alts probably get quite a bit of a scare. But if we do see this scenario where, let's say, we come down to 62.8, right, and that's where we form a bottom, that's where we get liquidation down and a bounce off of, and alts end up remaining strong. Like, let's just say Bitcoin like falls down to 62 and change, and then like alts don't really budge. That is a signal of a bottom, right? That's a signal that like a lot of the alt selling's over and people aren't too worried anymore. Like, all the people who have kind of been scared and selling have already sold out of alts, and then that can help form consensus around a bottom as well. So look for strength. If we fall down to 62.8 and you start seeing strength in altcoins, meaning they're like Bitcoin falls like 5%, how many percent is this? Let's say Bitcoin falls 4%. And then you see like Dogecoin falling 3% or 2% or even 1%. That's probably a local bottom, right? And probably a decent time to bid alts. Like, if you see ETH drop 2% after Bitcoin drops 4% down here, probably a decent time to bid alts, in my opinion. So longer video today, despite the fact that it's been pretty boring, pretty dry, pretty choppy. But this is just, wanted to outline my base case and give some reasons why. This video is sponsored by RabbitX. Check the link in the description if you're watching on YouTube. Also, if you want to sign up for Sistine Research and get our research reports and join our Discord, head over to sistine.ai. Again, link in the description below. Lastly, there is a link in the description below in the YouTube videos. If you'd like to sign up to get these videos sent to you every day or whenever we put them out via email, as well as the summary notes. Thanks so much for tuning in. Catch you next time. Peace.